When investors think about Palantir stock over the next 10 years, the debate usually centers on whether this company is a generational winner or a valuation stretched too far ahead of reality. Palantir Technologies has positioned itself as one of the defining names in the modern data analytics landscape, particularly as enthusiasm around generative artificial intelligence continues to reshape how businesses, governments, and militaries operate. With a market capitalization hovering around $400 billion, Palantir is no longer a niche or speculative player. It is now firmly embedded among the most influential technology companies benefiting from the artificial intelligence revolution. A major reason for this optimism is Palantir's ability to deliver advanced software as a service platforms that can process enormous volumes of data and transform that information into usable intelligence. Investors are especially excited about how these tools are being adopted by the United States military, allied defense forces, and public sector agencies, while also gaining traction with traditional enterprise customers. That dual exposure gives Palantir a rare blend of long-term government contracts and scalable commercial growth, which is an attractive combination for long-term shareholders. Over recent years, Palantir's business momentum has clearly intensified. This acceleration has not gone unnoticed by the market. Since the company went public through its initial public offering in 2020, the stock price has surged by more than 1,700%. That kind of move instantly places Palantir on the radar of growth-focused investors searching for the next multi-bagger opportunity. Still, experienced investors know that past gains alone do not ensure future success, which raises an important question. Can Palantir continue delivering exceptional returns from today's elevated levels? To understand the long-term outlook, it is essential to look at the foundation of Palantir's business. Modern organizations generate staggering amounts of unstructured data every single day. This includes internal reports, operational metrics, sensor data, financial transactions, and countless other information streams. Palantir's core mission is to take that chaotic data environment and organize it into something useful. Its platforms are designed to identify fraud risks, reveal operational inefficiencies, highlight emerging trends, and uncover new business opportunities that might otherwise remain hidden. This form of data analytics is distinct from the generative artificial intelligence systems that power large language models. However, the relationship between the two is deeply complementary. Generative artificial intelligence enhances the usability of Palantir's platforms by allowing users to interact with complex datasets through simple, natural language prompts. Instead of relying on highly technical workflows that require extensive training, users can ask direct questions and receive actionable insights almost instantly. This dramatically lowers the barrier to entry and expands the addressable market for Palantir's technology. Artificial intelligence also accelerates decision-making by delivering insights in real time. In fast-moving environments, whether in business or defense, speed and accuracy can determine outcomes. This is one reason Palantir's software has found strong demand in military applications. The company works closely with the armed forces of United States allies such as Israel and Ukraine, supporting capabilities that range from identifying hostile targets to clearing minefields and coordinating battlefield operations. These use cases highlight how Palantir's tools function in high-stakes situations where data clarity is critical. A defining milestone for the company arrived with the launch of Palantir's artificial intelligence platform in mid-2023. This release represented a turning point in how the market viewed Palantir's role within the broader artificial intelligence ecosystem. Analysts and investors began to recognize that Palantir was not simply a legacy government contractor, but a company actively shaping how artificial intelligence and data analytics converge in real-world applications. The timing of this platform rollout also aligned with a noticeable improvement in the company's financial performance. Palantir's Q3 earnings results served as a clear example of that momentum. The company delivered a standout performance, with revenue climbing 63% year-over-year to approximately $1.18 billion. This growth was driven largely by extraordinary strength in the United States commercial segment. Sales in that area surged 121% to about $397 million, representing roughly one-third of total company revenue. These figures underscore a critical shift in Palantir's business model. While Palantir has long been associated with intelligence agencies and government clients, commercial customers are now becoming the primary engine of growth. This evolution carries meaningful advantages. The private sector is significantly larger than the public sector and often has a greater need for advanced analytics, since profit-oriented companies face constant pressure to optimize operations, reduce costs, and gain competitive advantages. Expanding into commercial markets also helps Palantir diversify its revenue base and reduce dependence on government budgets. At the same time, this transition introduces new challenges. Political risk remains a factor due to Palantir's involvement in international conflicts and the public political positions of co-founder Peter Thiel. Changes in political leadership could influence how government agencies view partnerships with the company. Recent experiences involving other major corporations have shown how quickly political associations can impact brand perception and business relationships. By increasing its exposure to private sector customers, Palantir can partially offset this risk, but it does not eliminate it entirely. Competition is another important consideration. As Palantir moves deeper into commercial markets, it faces established rivals such as Microsoft, which offers a comparable data analytics platform known as Fabric, and Snowflake, a well-known player in cloud-based data infrastructure. These companies possess vast resources, deep enterprise relationships, and strong brand recognition. Palantir must continue differentiating itself through superior integration, security, and real-time decision-making capabilities to maintain its edge. Another point of debate among investors involves the depth of Palantir's competitive moat in artificial intelligence. The company's artificial intelligence platform does not rely on proprietary large language models, which raises questions about how defensible its position is compared to companies building foundational artificial intelligence technologies. Supporters argue that Palantir's strength lies in deployment, integration, and trust, especially in regulated and mission-critical environments. Skeptics counter that reliance on external models could limit long-term pricing power. Valuation remains one of the most contentious aspects of the Palantir investment thesis. With a price-to-earnings ratio around 170, the stock is priced for exceptional execution and sustained growth. Investors buying at current levels are effectively betting that Palantir's expansion is still in its early stages and that revenue, margins, and cash flow will continue compounding for many years. This kind of valuation leaves a little room for disappointment, but it also reflects the market's belief in Palantir's long-term potential. Over a 10-year time horizon, patient investors who believe in Palantir's vision may be rewarded if the company successfully scales its commercial business, deepens its government relationships, and remains a key player in applied artificial intelligence. Volatility along the way is almost guaranteed, especially given the stock's high valuation and sensitivity to growth expectations. However, for investors with a long-term mindset and tolerance for risk, holding Palantir stock through market cycles could prove to be a compelling strategy. Taking all of these factors into account, buying and holding Palantir stock for the next 10 years appears to be the most reasonable approach for those who are confident in the company's ability to execute and dominate its niche. The story is not without risks, but the potential rewards remain substantial if Palantir continues converting technological leadership into durable financial performance. As always, investors should conduct their own research and consider their personal risk tolerance before making any investment decisions. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.